Welcome to Trump Wire, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. The $2.8 trillion US auto market is in chaos, caught between two extremes that are reshaping how Americans buy and sell cars. Whether you're a first-time buyer, a family looking to upgrade, or someone hoping to trade in, the landscape has never been more confusing or more divided. New car prices are skyrocketing, reaching record highs that put even basic models out of reach for many. Sticker prices have jumped by thousands of dollars in just a few years, and the average new car now costs more than ever before. Meanwhile, used car prices are crashing. Vehicles that were selling for a premium just months ago are now seeing their values plummet, with some models losing thousands in value almost overnight. On one side, new vehicles are so expensive that many families are priced out, with sticker prices rising by the thousands. Even those with good credit are struggling to afford monthly payments, and financing options are tightening. Meanwhile, the used car market is in freefall, with prices dropping week after week, leaving sellers underwater and buyers confused. Many who bought at the peak are now stuck with cars worth far less than they owe. Dealers are caught in the middle, struggling to move pricey new inventory while their used cars lose value daily. They're facing tough decisions about what to stock, how to price, and how to keep customers coming through the doors. Buyers face a tough choice: stretch for a costly new car with high payments and long loan terms, or risk the unpredictable used market, where prices could fall even further, and reliability is a constant concern. Sellers and trade-in customers are watching their car values evaporate, making upgrades harder and leaving many upside down on their loans. It's a confusing time. Crashing prices in one lane, record highs in another. The gap between new and used has never been wider, and the rules of the game are changing fast. What's causing this split? It's a mix of government policies, supply chain issues, and automakers shifting focus to electric vehicles and high-end models, leaving budget buyers with fewer options. We'll break down what's really happening, explain the forces at play, and help you make sense of this wild market. Let's dive in and see what's driving the biggest split the auto industry has seen in decades. Why are new cars so expensive? Tariffs are a huge reason. In April 2025, the US slapped a 25% tariff on many imported cars and parts, up from just 2.5%. Permanent tariffs now hit cars from the EU, Japan, South Korea, Mexico, and Canada. Automakers tried to absorb the costs, but losses forced them to pass it on to buyers. Even American-made cars are affected. Thousands of parts are imported and now cost more. The result? The average new car sticker price is over $51,000, with buyers actually paying about $49,000. That's $10,500 more than 5 years ago. Tariffs are pouring gasoline on already high prices, and automakers have no choice but to raise prices to survive. Fewer affordable options remain, and the pain is just beginning. If you're shopping for new, brace yourself for even higher prices ahead. The global trade web is hitting your wallet hard. It's not just tariffs. Policy changes are shaking up the market. The $7,500 federal tax credit for new EVs expired on September 30, 2025, making electric cars much pricier overnight. States like California dropped plans for their own credits, leaving buyers with no relief. At the same time, new safety regulations have been delayed, adding uncertainty for buyers and automakers. Major recalls and shifting rules make it even harder to know what's safe or a good deal. The end of the EV credit will likely slow electric car sales and make the market even more unpredictable. For buyers, the window for affordable EVs has slammed shut. Policy changes in Washington are hitting your choices and your wallet. New car lots are a paradox these days. Prices are sky high, yet dealers are more eager than ever to make deals. It's a strange time to be shopping for a car. Sticker shock is real, but so is the pressure on dealerships to move metal. If you've driven by a dealership lately, you've probably noticed the lots are packed, but the showrooms are quieter than usual. Buyers are holding back, waiting for the right moment, while dealers are searching for ways to entice them back in. With a 77-day supply of new cars sitting on lots, and the 2026 models already rolling in, dealers are under the gun to clear out the 2025s fast. Every day those cars sit unsold, it costs the dealership money, so the pressure is mounting. Automakers are responding with some of the biggest incentives we've seen in years. The average deal now includes over $3,500 off the sticker price, plus 0% financing and generous cashback offers. These incentives can make a huge difference, especially if you're financing or trading in. The best deals are on overstocked brands like Land Rover, Ram, and Audi. Dealers with too many of these models are ready to negotiate hard. If you're open to different brands or models, you could score a deal that would have been unthinkable just a year ago. On the flip side, brands with low inventory like Toyota and Honda are holding firm on prices. With fewer cars to sell, they don't need to offer big discounts, so expect to pay close to sticker price if you're set on one of these. Your ability to get a great deal really depends on what you're shopping for. Flexibility is key. If you're willing to consider different makes, models, or even colors, you'll have a much better shot at saving big. Do your homework. Research which brands have high inventory and target leftover models for the biggest savings. Sometimes last year's model with a few extra miles can be the smartest buy on the lot. There are still over 85,000 unsold 2024 models nationwide. These carry the deepest discounts, as dealers are eager to clear them out before the next wave arrives. If you don't mind driving last year's model, you could save thousands. Don't fall in love with just one model or trim. Shop around, compare options, and be ready to pounce when you spot a deal. The more flexible you are, the more negotiating power you'll have. A little homework can save you thousands. Check online listings, compare dealer offers, and don't be afraid to ask for extras like free maintenance or accessories. In this market, knowledge is your best bargaining chip. The more you know about inventory levels, incentives, and pricing trends, the stronger your position at the negotiating table. The right timing and flexibility can turn a high price into a bargain. Sometimes waiting just a few weeks or shopping at the end of the month can make all the difference. Don't miss out on the incentives. Act fast because these deals won't last forever. The best bargains go quickly, so be prepared to move when you find the right car at the right price. The used car market is the opposite story. Prices are falling after years of record highs. The average used car now costs $25,512, with prices dropping for 20 straight weeks. But competition is fierce. Good, affordable used cars are in short supply due to pandemic-era production cuts. If you want a reliable used car under $15,000, inventory is extremely tight, just a 29-day supply nationwide. When a well-priced car hits the market, it's gone in days or even hours. This demand is driving up prices for older cars, and the average vehicle age on U.S. roads is now 12.8 years. People are holding on to cars longer and buying older models out of necessity. The used market is a battleground for budget shoppers. Be ready to act fast, expand your search, and expect bidding wars. The crash is real, but so is the competition. For buyers, patience and speed are both essential. The affordable new car is vanishing. 6 years ago, there were 36 new models under $25,000. Now, just 10 remain, and most are being discontinued. Automakers are ditching low-margin small cars for profitable trucks, SUVs, and luxury models. Sales of vehicles over $60,000 have surged 163% in 5 years, while entry-level buyers are left behind. First-time buyers and families are forced into the competitive used market. The idea of a brand new starter car is fading fast. Automakers are setting the entry point for new cars at $30,000 or more. The affordability crisis is reshaping the market and your options. The true cost of owning a car goes way beyond the sticker price. Insurance rates are soaring, up nearly 5% in a year, thanks to pricier repairs and tariffs on parts. The average annual premium is now $2,671, and high-end or complex vehicles cost even more to insure. Maintenance costs are rising as cars get more complex and people keep them longer. Simple repairs now involve expensive sensors and electronics. Financing is tougher too. Credit is tighter and rates are higher for those with less than perfect credit. The average annual cost to own and operate a new car is $11,577, almost $1,000 a month. Factor in insurance, repairs, and financing before you buy. The hidden costs are adding up fast. Owning a car has never been pricier. So, what should you do in this wild market? Here's your game plan. Whether you're a first-time buyer, a seasoned car owner, or just trying to make sense of the current chaos, having a strategy is more important than ever. The market is unpredictable, but with the right approach you can still come out ahead. If you're buying new, be flexible. Target brands with high inventory and hunt for incentives. Don't get too attached to a single make or model. Instead, keep an open mind and compare what's available. Sometimes the best deals are on cars you hadn't even considered. Look for leftover 2024 or 2025 models for the best deals. Dealers are often eager to clear out last year's inventory, so you might score a significant discount. Ask about demo models or vehicles with minor mileage. They can offer even more value. If you're buying used, expand your search radius and be ready to act fast. Good deals don't last. Check listings in nearby cities or even out of state. Set alerts for new postings and be prepared to move quickly when you spot a great option. Have your financing lined up and get a pre-purchase inspection. Pre-approval from your bank or credit union can give you an edge, and a thorough inspection helps you avoid costly surprises down the road. Selling or trading in. Shop your car to multiple dealers and online retailers for the best offer. Don't settle for the first quote. Comparison shopping can add hundreds, even thousands to your bottom line. Consider a private sale for top dollar, but be ready for extra work. You'll need to handle paperwork, meet with buyers, and ensure a safe transaction, but the payoff can be worth it. If you're keeping your current car, prioritize maintenance. Routine care is cheaper than major repairs. Stay on top of oil changes, brakes, and tires to extend your car's life and avoid unexpected breakdowns. Set aside an emergency fund for unexpected fixes. Even a small monthly contribution can make a big difference when surprise repairs pop up. Sometimes the smartest move is to keep your current car running. With prices high and inventory tight, holding onto a reliable vehicle can save you money and stress. In this market, preparation and flexibility are everything. Do your research, talk to trusted sources, and be ready to pivot if your first plan doesn't work out. Don't rush, let the deals come to you. Patience can pay off, especially if you're not in a hurry to buy or sell. Your best asset is a clear plan. Stay informed, stay patient, and you'll be ready to make the right move when the time is right. Looking ahead to 2026, don't expect a quick fix. New car prices will keep rising as tariffs ripple through the supply chain. $52,000 MSRPs could become the norm. Incentives will stay strong on less popular models, but affordable choices will keep shrinking. Used car prices will keep correcting, but a shortage of newer used cars will keep older models in demand. The battle for cars under $20,000 will stay fierce. Be patient, do your homework, and track incentives and inventory. The divide between new and used prices will define the market. Stay sharp and good luck out there.